Doing outstanding Friday, September 5th, 3:33 on this fine afternoon. Talk really quick about the market, some names I'm looking at, go from there. S&P off the lows, well off the lows. 11 o'clock was the bottom, 643.33. I think we hit that on Monday. Uh, and then bounced, and we've been chopping around and just hit afternoon highs just a little bit ago. All on the heels of that jobs report, right? It depends on, similar to all the data that's come out pretty much this entire year, it depends on the lens that you're looking at the data through, or at least the lens that person who writes the headline is looking at the data through, right? So this morning's job report, if you're looking at some of the headlines that have been since the tariffs and before that, is that tariffs are bad, inflation's going to show up, it's going to hurt the economy, we're going to be in a recession, we are in a recession, or what have you. So if you're looking through that lens, then this data bad, right? The first negative jobs numbers since COVID, from the backward revision to July, jobless numbers, the amount of jobs created, less than estimates, unemployment rate upticking. Yeah, just not a good backdrop. And you can make the case, oh, this is bad. This is showing signs of the economy weakening, things like that. Uh, on the flip side, you could say, well, there's issues at play, right? And I always try to bring up all the things over the last 8 to 10 months. There's been so many headwinds, right? I mean, you can almost be in sarcastically say, well, this is the government jobs cuts finally showing up in the jobs report, right? But that was many months ago. It's like every thing that comes out that kind of like shakes the market a little bit, or at least creates headlines, never comes to fruition. But at some point, I'm not just an uber bull or going to dismiss all the things going on. You have to think at some point tariffs going to have some kind of impact, or at least whether it be slow inflation, weakening economy, who knows. But so if you're looking at that lens, you see all the headlines today, and now worst jobs report. It's almost like if you read the headlines and then looked at the market, you think we would be down like 2.5% or something. uh, on the flip side, now it's like the jobs report. It's the thing is, it's like I don't think the jobs report was horrible, but I guess you can make it out to be, considering what we already had in the summer. It's just the trend, right? And when Fed Chair Powell always talks about the data, he always looks at like 1 month outliers, like, oh well, we got to see a couple months worth, right? So now the jobs number is kind of showing, hey, there might be weakness. To me, it just emboldened Powell's ability to cut rates in September without looking like he's bending the knee, right? Because a lot of pressure from the current administration, and you can like validly make a case. Hey, it's probably makes sense to at least cut it 1/4%, just so we're ahead of things, right? Because if you don't remember back in COVID, the inflation would start to go up, and they said, oh, inflation's transitory. That was the big buzzword. So you don't want to be in a situation where they think that the jobs report or weakening numbers in the economy is going to be just a small outlier in regards to tariffs. Maybe it's got to be something that's addressed. Not only that, it might keep the economy going. So uh, anyway, you look at the market reaction. It was a sell the news event all the way up at highs in the morning, right at the morning at the open, all the way up to 652. And then after the open, it was nothing but selling to the downside. Reversed probably $9 on the SPY down to 643. Found support and then bouncing around ever since. The thing is, yields are tumbling. So I mean, you can make the case that's a good thing. The dollar's weaker, so that's not the best scenario. But the names that really have sold off today of the financial sector, and they do better in a higher rate environment. So kind of like gives that the credibility that the Fed's going to cut rates. And now you look at the probability of Fed cutting rates; it's 100% now, as of a little while ago. 100% probability to cut rates at least 1/4% in a week and a half. And now there's like a 10 or 15% probability it might be two. And I'm sure there's gonna be rumblings of that over the weekend, especially from folks who think this data is pointing. It's the doom and gloomers. The thing is, it's like here's a weekend. We have a historically weak month. It's September, right? This week was kind of a little tumultuous now. So I think we'll still be a little slightly in the green. Did I pull it up on the SPY? I probably didn't. I think we'll still be green on the week. But let's see here. I can tell you what it is at this exact second. The S&P is up 0.33%. The NASDAQ is up. And why don't I have this? Because I don't. Sorry. The Nasdaq's up 1% on a week. So all things considered, not a horrible week. Just end of week. I wouldn't call window dressing, but annoying. So we'll see how next week's plays out. There's still earnings next week: GameStop, Chewy, Oracle, Adobe. So there'll still be some smattering of earnings, and then all eyes gonna be on the Fed the following week, right? I hate everybody talking about it. It's funny. Maybe 15 years ago, when Ben Bernanke was around before like during the financial crisis, before it, nobody ever really talked about the Fed and printing money and the Federal Reserve and cutting rate. It wasn't really as much mainstream now, and I think some of it's the FinTwit, which kind of gapped the distance between the retail trader and the people who are at, had the analysts and the Goldman Sachs and the Morgan Stanley, right? Kind of like bridge that gap where all that information is now more readily available. So now you hear people talking about it, you know, some people talking on it with some basis of decent facts and able to speak to it well, and other folks just speak to it like, they think that Fed Chair Powell is actually like goes to his home and like prints money and then just gives it out, and that's why there's inflation. So all right. So that's the overall market. So now just individual names, and with the financial selling off, you said like this morning, Hood opened green, and I'm like, I still thought there was a possibility. Of course, I didn't pull the trigger, and then it starts breaking down with the rest of financials. So to me, it was someone was like, I'm like, Bitcoin's rallying, so I didn't think that some of these other names like Coin and what have you would sell off too. So I waited until the market finally finds some pressure. In lieu of trying to get some puts for next week, I got the puts for the following week. I put it in the tweet that I don't think. Do I think could go under 90? Possibly, but I don't think it has to go. It goes. It can go. I mean, to 80 possibly, right? But I think 89, 90. That's probably a good threshold in the next couple sessions. So uh, I got those kind of at a hedge. Of course, uh, Visa would have been the better play, right? So I had those Visa puts at the start of the week, spec trade, and then finally gave it up with the rest of financials. I posted on Wednesday. It was right at the 50-day moving average holding, and then just got destroyed today. And I was looking at the 330s for next week on Visa, and those probably should have been ones I got. But I'll just hold the hoods for now as more of a hedge. That I give a high probability I'll be able to cash some out for profits, and at least be a little more open to adding some calls if there's opportunities, right? So on the flip side, IIPR all the way up to over 57.50 right in the morning, and then it's just been chopping around. My calls are up close to 300% at times. I already locked them in for a double, so I'll just continue to hold the rest of the October 60s. I was looking to take some off and maybe go out to the October 65s, but it's not like it's moving too much, right? So I'll be patient. 57.50 breaks and holds with some gumption, I guess would be the word to use. Then I'll look to add some more strikes. And take a look at pool. I forget that the meme from, I don't know if it's the Sopranos. Just when you think I'm out, they pull me back. It's kind of like pool, right? I mean, the 308 Wednesday, you think that's it? The calls are done, and then boom, 2-day rally. I don't know if this is just continuation from the conference yesterday, but monster move over multi-week over the August highs, right? So now you can. I don't want to call it a head and shoulders formation, but it definitely has that look that it can go test the 340s, and the 340s was earnings. So the thing is, their earnings back in July they weren't like knock your socks off earnings, but it's kind of like a relief that their earnings weren't bad, I guess you would say. So I was looking possibly get some October strikes, but again, it doesn't make any sense to add anything more until my 350s are solidly in the green. So I'll continue to hold those. And I mean, call me crazy. The thing is and I was talking about earlier this week, swim and pool, two names that just benefit so much from a lower rate environment. So as yields go down, it's like the market's going to price in substantially higher growth margins, all that fun stuff for pool. So hopefully this is the start of something. I'm still shocked that it's trading down here. I don't even know what Buffett's average is. I don't think he mentioned it on pool, but he's got to be flat on pool, I would think. So I don't pool has a stock buyback program. So great to see it finally break out over the 200-day moving average. I think 340 plus next week, maybe 350 and beyond. That'd be nice. Now, other names still watching the line for a bounce. You don't want to chase it here today because you don't know what's going to happen over the weekend with all the headlines. I wouldn't be surprised to see a little weakness on Monday, so maybe there'll be a better opportunity there. Adobe reports next Thursday, I believe it is. Another name, you take a look. I mean, maybe it wants to go down to test 330 again Monday, Tuesday, and then that could be a nice one for some premium build into earnings. So that's that. Reddit today, did its normal run up in the morning by 10 o'clock, give it all back by 11. So all the way to 241, back down to 230 by 11, and then just like a slow melt. And it's hitting pretty much right at the highs of the day right here. So that's probably going to hit 250, and then it's going to be 300 sometime in October or November. I'm going to be kicking myself. But this thing with that trade, unless you get the calls really early and then just hold, like April 7th would have been the ideal date to get the Reddit calls when the stock was under $100. Was it 100? What? Am I right? Yeah. Why am I having tough now, right? The premium's more expensive, so tougher to play on a risk reward basis. Anyway, that's it. I'm out of breath trying to think of some of the other things going on. CGC. A Serve, Serve is treading water at $10. I've been eyeing Joby as well. Still have the last day October's. I mean, should have sold those, but what are you gonna do? Joby's actually at the high of the days right here. I The high of the day, excuse me. I, Another name, not just gonna be patient, but I think it could run up into the 20s by the end of the year. Serve, my thoughts there. Just one other kick in the butt, another analyst upgrade or some kind of news. I think then that take it to the next stop. Anyway, have a great weekend, folks. I'll be back rock and roll.